Hello and welcome to another Smaulgld live stream. It is Tuesday, the 4th of June, 2019. And tonight's topic is Fed chatter boosts Trump, markets and gold while Bitcoin dumps. Hello and welcome, Smaulgld mug stackers and game changers. Today we're going to take a look at what's been happening in the gold and silver markets and the crypto markets. And we've also got a bit of Moronica, so let's take a look. What's been happening? Yesterday was a big day for the gold market and the silver market as well. But gold has stealthily been moving on up and is now well over $1,300. And it needs to get past that $1,350. It's tested it 3, 4, maybe 5 times in the last 4 or 5 years and never has managed to poke above that, and many believe that if it does poke above the 1350, 1360, 1370 and hold it for a couple of days, that it may be off to the races. But then of course that may be a bit of hyperbole, but that's also people who follow charts believe that that is a resistance, very strong resistance level for gold. Silver has not even managed to get past 15 in this most recent rally, and therefore the gold-silver ratio has gone all the way up past 90 to 1. It didn't close at 90 to 1, closed just under. But let's take a look at yesterday. We didn't cover the gold price yesterday. The gold price yesterday was up about $20, and that was a pretty big move. It was good for almost 1.5%. Silver had a similar move. Remember, gold has been drifting higher and silver somewhat been drifting lower. So gold was up almost 1.5% yesterday, while silver yesterday was also up. It was up about 1.5% as well. But you can see under $15. It's been all the way as low down as to $14.56. And that took the gold-silver ratio yesterday just under 90 to 1. Here it is right here. Today it actually hit 90 to 1. And it hit 90 to 1 yesterday as well, just for a brief moment. You can see on the chart there. And it closed at 89.6, and today it closed there about the same place. Now today was a big day, probably bigger than yesterday in terms of news for gold, where you might think that gold would have risen, because today Chairman Powell was speaking and he let fly that he would do what he needs to do in order to protect the U.S. economy. And that's against the backdrop of the tariff war that Trump has engaged with China and is starting to engage with Mexico. Now that's a big support for the president, because the Fed, at least from Trump's perspective, has been raising rates against him during his first couple of years, and it seems that they have backed off on that. There was even talk of Trump firing Powell, and it wasn't just Powell today that was speaking. We also heard from Fed Chair Evans from Chicago, Fed President, not Chair, of Chicago, say that he thinks with inflation being on the light side, there's capacity to adjust policy if that's necessary. Now, I suppose yesterday this is all coming after the fact with St. Louis Fed President Bullard yesterday saying that we may need to cut interest rates. He actually used the words to, quote, prop up inflation. But Powell is actually saying we need to prop up the economy if we have negative, but he didn't use the word cut rates. So I guess that didn't drive sentiment as much today as it did yesterday. There was no follow-through rally in gold as a result of Powell and Evans' comments. But Bullard yesterday, I think, lit the fire when he said we may need to cut rates. It's the first time they've talked about really cutting rates since they said they're going to wait and see. Now they're saying they may cut, and I think yesterday I put here, blink, stocks pop as Fed's Bullard say rate cut might be warranted soon. Now the stock market in the last couple of days has gone up, but today it was up. Today was up 512 points. The Dow Jones at 25,332. The NASDAQ up 194 to 7527, and S&P 500 getting back over 2,800 to 2803, All exchanges are up over 2%. The NASDAQ up 2.65%. All this on the basis of just some Fed chatter. And here's what Powell said. Hints. He didn't use the word rate cut. We'll cut rate if needed over trade wars, and they're prepared to respond to the Trump administration's trade conflicts to protect the economy. And I don't know how much this has to do with browbeating, or it could reflect also, and you'll never know with the Fed the same way you will know with the other agencies. But last night we were talking about how the Trump administration not only has William Barr going after and investigating through Durham how the FBI, CIA handled handled the FISA applications and the entire Russian investigation. He has another attorney looking at the Clinton investigation, how that was handled. They have the Inspector General Horowitz looking at how FISA application was handled as well. And we learned yesterday, as we discussed, we have the Department of Justice and the FTC taking a look at Google, Facebook, Apple, Amazon, and then Trump taking a swipe at AT&T yesterday. So it could reflect that the parts of government that are now, I would say, firmly under control, or more firmly under control of the new president. Normally that happens within weeks, but it seems that Trump is finally starting to get a handle on the levers of government. And I think the Fed isn't necessarily a lever of government, because I'm not going to get into the whole structure of the Fed, but it is not a governmental branch. It's not part of the Treasury. It makes things confusing. It's a private bank sanctioned by the Congress, but it does not report directly. But the president might be able to fire the Fed. But the point being is, I think that the Fed is falling somewhat in line, given that this, what they call coup attempt, appears to have failed. And I think that's probably a reason why the Fed is talking rate cuts in support of Trump policy. Because if they were really trying to knock him out of the box, you would have the Fed working in conjunction with the others and say, okay, if Trump wants to create this stir, that's great. You know, we heard Bill Maher say the best way to get rid of the president, let's hope we have a recession. Well, the Fed can create a recession. It's one of the easiest things they can do. Just ratchet up interest rates more than they need to under some whatever gibberish justification they want to say, or they want to act like they're prudent, and you can choke off the economy. It doesn't look like they are in that mindset. So, as a result, today we did have a big stock market gain, and we saw yesterday we had those big moves in gold and silver. Let's take a look at today's movement. Was not very much. Here's gold today. It kind of zigzagged around one and ended up just a little bit. It didn't really move. It didn't really build off of the gains of yesterday, and it closed at 13 1/4. That's a nice close, but it's not making that significant push today, or didn't make any significant strides towards the 1350 level. Silver, pretty much the same story. Let's take a look at the silver price today, and it was up like 4 cents. It finished closer to the end of the day at the high, but up about 1/4%. But today, the gold-silver ratio did indeed pop over at 90-1. Let me show you that chart. The unsustainable gold-silver ratio. Here it is. Yeah. And there you go. It hit 90.3. It spent a couple of hours during the day over 90. It was at 90, 90.1, 90.2. Closed the day at 90.6, pretty much where it closed yesterday. Now, some other gold and silver stories. Let's take a look at media's taking notice. Gold rising on its longest winning streak in more than 4 months. We'll take a look at the commitment of traders and all the COMEX things that are going on Solid Gold Sunday with Smaulgld. We'll have the end of the week numbers. We'll do the same on Saturday with Saturday Night Silver with Smaulgld Saturday night. Sunday we also have some other topics to discuss, but we'll schedule some time to take a look at the COMEX trading in gold and see what that might mean going forward. But media is taking notice, at least, that gold is now over 1,300 and has been rising for quite some time. There's another gold tops 1,300, highest level in 7 weeks. And they are attributing this, they always have to look for some reason, but I'm not quite sure this is the reason, fresh signs of escalation in tariff tensions. This tariff thing's been going on for quite some time, and gold hasn't really caught a bid until recently, and it's not really a dramatic bid. I think the big move yesterday, and it was, a point and a half, percentage and a half, wasn't that big, but that was on not necessarily news of escalating tariffs and the Mexican tariffs that Trump is recommending, but more because of Bullard. Bullard actually using the word rate cut. We have room to cut rates. And today I would have expected, with Powell's assertion falling in line with Bullard, and again, Powell is the chair, that we would have had a bigger follow through. Now, sometimes we've seen in trading that days where there's news where you might expect the price of gold or silver to rise, it doesn't, and then it does the next day. We're not seeing it in the aftermarkets. They're flat, but maybe tomorrow the markets will digest this further, because I actually think that's very bullish when you have a few Fed presidents. You had Evans of Chicago, Bullard of St. Louis, and the Fed chair Powell indicating, hey, not saying Mario Draghi will do what it takes, but indicating that they could cut interest rates. And I had said back in March they would cut them in this year once. I didn't think they'd go overboard, because Trump would want to get one in that would have the salubrious effect come election time next year. They take a while to work through the economy. Also in Australia, this looks like it's going global. Australia cut their rate, this is a low for them, down to 1.25%. So it looks like we're probably not going to get off the dime in the EU. ECB is supposed to raise interest rates. Maybe they won't do it. Japan doesn't look like they're raising interest rates. Now, the U.S. did have a period, the Fed had a period of raising rates for a couple of years. Actually, since 2015. They raised them once in 2015, quarter point, once in 2016, and then they ratcheted up the rate hikes since 2016 through 17 and 18. But it looks like the U.S., the Fed, is now not going to be able to, quote, normalize rates, something that I've been talking about since 2015 and 14, that the Fed would raise rates, but they wouldn't normalize them, when everyone was saying they could never raise rates. And, of course, when they did raise rates, then they started saying they can't normalize them. But that's not the same as saying that you called it correctly. Okay, so that is what's going on with gold in price terms. But let's take a look at some other gold stories. Here's the 5-year gold-silver ratio. And you remember, I've been talking about this for years, that when they've been going on about unsustainable. Actually, what I predict is going to happen, I don't make predictions, I don't do price predictions, and people insist they make them all the time, and they make them so often you can always find one that might be right. But what I've been saying all along, and not because I've been saying all along that it's correct, but there's nothing that's indicated to me that would change this. And I did, at the beginning of the year, make a price prediction on silver contingent on where gold goes, that if gold, because gold has the monetary premium and silver does not, and that's not even debatable, people can talk about silver as money and Roman denarius for a day's pay for soldiers. By the way, I did research that. That story's half true. The Roman soldiers, many of them volunteered. The ones that got paid, the bulk of their pay was not in Roman denarius. It was to cover all their other their living and their food expenses. And then they got the denarius as an afterthought. And in many cases, they didn't get paid at the time either. You had to work you had to be in the army for a long period of time. You got paid on the way out. So essentially you were volunteering and they were paying for your upkeep. So it's not like there was this system where you just signed up for the Roman army and you got a day's pay in a denarius of silver. It wasn't quite that simple. But anyway, my point is that silver is not a monetary metal, and it's not an opinion, it's a fact. If you just look at the demand profile for silver is not for investment. Yeah, there's silver eagles sold, but for the bulk of silver's 800, 900, 1 billion ounces a year of supply, it gets eaten up by industry, jewelry, silverware, and then finally, as an afterthought, investment. Whereas gold, I wish I could play a clip for it. Peter Schiff was talking about this the other day with Barry Silbert, the guy, the grayscale Bitcoin. They were debating Bitcoin and gold, but that's not the point. Peter Schiff was mentioning that jewelry is the number one demand source for gold, and that's true. He does recognize that. And then he was saying that the next is the monetary. I mean, they weren't discussing the context of silver here. And as a result of that, central banks need it. People invest in gold. So there's a demand profile for gold that is investment, whereas silver, it's just not there. So my point is that if gold rises, it's generally not going to rise on jewelry demand, although it can be sustained there, because as the price rises, jewelry consumption goes down, just like anything else. For example, in India, they'll buy more jewelry if the price goes down of silver. But if the price goes up, they're going to slam the brakes on. Now, for industry, it can remain constant. We saw that with palladium. Demand goes up, supply goes down. They still use the palladium goes up. By the way, let's take a look at palladium. I think gold, nope. Palladium's at 1327, gold at 1325. It's another thing psychologically. Gold needs to be the number one precious metal, not palladium. It used to be acceptable for platinum to be the number one highest priced precious metal, but not palladium. Palladium always trades 2 or 3 times less than platinum, and platinum usually trades 1.5 times gold, and platinum's trading much lower than palladium, and gold is trading lower than palladium. Anyway, sorry for the sidetrack. The idea of the gold-silver ratio is that if gold has a demand surge as a result of investment demand, my theory has been, and it's borne out by history, and it's borne out by what's happening recently, if gold starts to move higher, silver won't move higher until a certain segment of the investing public or institutions will see some monetary value in silver that's not being properly valued. Right now, the reason silver is low, and I've been saying the reason it's low and it was going to stay low, is there is no investment demand for silver, and they're producing enough supply to meet the industrial demand, and the industrial demand isn't skyrocketing. Here's the point. Yes, the reason I mentioned Peter Schiff, what he said about gold's number one in demand being jewelry, it was in response to, but this is instructive for silver too, Barry Silbert pointed out that over the last 10 years, industrial demand for gold had gone down, because one of Peter's points is you can't have Bitcoin without gold because the gold is in the devices and so on. Silbert made the point I make a lot about silver, that even though there's more devices, he made almost an identical argument, but he applied it to gold use in devices, that the demand for gold, and I would say it's true also for silver, for electronics is actually down the last 10 years. And Peter countered, yes, but the demand for gold has always been top jewelry. It's not really for industry. But now for silver, that is a driving demand, and that demand is going down. So that's why I was saying there's no reason for silver to be going higher if its primary driver of demand, which is industrial, which is solar and electronics in the aggregate, is not going higher. Well, we know that the investment demand is not going higher, so now you're relying on Indians to buy silverware, and that's just not enough. However, if gold gets a bid, starts moving higher as a result of financial crisis, debt crisis, China crisis, whatever crisis there is, for whatever reason, additional gold demand comes about for investment. After it rises for a while, people will start to look at the component of silver that's investment, and they'll put some money into that, and then silver will also rise. Now, as we saw in 1979, 1980, and 2010, 2011, if you have a sustained bull run in gold, eventually silver not only will have a sustained bull run, silver will, quote, skyrocket. But in both instances, those rallies in silver were cut off at the knees. Now, the first case was with the Hunt brothers in 1980, and that was clearly, there's no doubt what happened there. That was as a result of COMEX essentially allowing traders only to sell silver on the COMEX, and that shut down the whole party there. It looks like, and we don't have the same clarity on what happened in April 2011 when the silver price just got smashed, and it hasn't recovered ever since. So you have to beware of a silver rally. But in any event, that's where we are with gold and its recent rise. But we're getting ahead of ourselves because in my mind and most people who watch this, it has to get above 1350 and has to then make some solid strides towards 1400 and before you even start thinking about silver. Because remember, silver hasn't even top 15. It's got a top 16. It hasn't done that either. Okay, now we had today, you're seeing some positive news here. This was in Bloomberg. If this is quite sure. It says investors stampede into gold as top ETF swells most since 2016. A little bit of hyperbole there. I did check the ETF flows. There's no stampede. In fact, I think Craig Hemke has pointed this out to me, Turk Ferguson, that the gold ETFs, and he's right, if you look at the chart, I used to say that you can predict the price of a gold based on the flows in the ETFs, and he pointed out the flows follow the price. They don't cause the price. But you can see the black line being the price of gold, and then the gold ETFs, the amounts that are going into them follows it. So the fact that the gold price is going up, you can see at the far right, there's a little tick up there that more gold is flowing into the ETFs. So there's not really a stampede yet. There probably will be. If the price goes higher, then the flows will continue to flow in, but there's not a causal relationship there. All right, what else do we have for gold today? Indian gold demand. I got to get to the charts on this, and I get them from Nick Laird, who gets them directly from the Indian government website. He gets the official numbers. Bloomberg and all others, Economic Times of India, they somehow managed to find somebody at that department who leaks the preliminary numbers. So like I have March's numbers. I'll probably get the official numbers from the Indian website for April in like 3 weeks. Well, the leaked number is already available for May, and it looks like a big one. They're saying it's up 49% gold demand in India, up from last year, and looks like 116 tons. That's the preliminary reading. That's a lot. Because if you do 100 tons a month, you're going to have well over 1,000 tons a year. And India generally doesn't import that much. The problem with when you get a little too much gold imports into India, that's when they start trying to tax it. What too many gold imports does is screws up their balance of trade, because that's where they get all their gold. When you have 110 tons of $4.7 billion coming in, that could be 10-15% of all Indian imports, and then that starts to put pressure on the rupee. Ironic that gold flowing into India drives the rupee down, because it's not viewed as gold going into the Indian rupee. It's gold going into Indians' hands, and the government never sees that gold. All right, there was a couple of other stories. Interest for gold. Let's see what we got. We got Malaysia and the Philippines. Now the Philippines, another central bank. I say here, the Philippines will be buying gold from its domestic miners. That's something no one's been pointing out. I'm not the most unique person in the world, but I've been saying, everyone keeps saying, central banks are buying gold. That is all I need to know. They know what is coming. And they repeat this mantra about the countries that buy central gold. They never point out that Uzbekistan, Kazakhstan, Russia, China are all major gold producers, and they are the ones that are adding gold. Makes sense for them to do so. But makes sense for them to do so, it doesn't necessarily mean they're preparing for what's coming. But now Philippines has realized, why not? Especially as the price rises, you might as well. There's any central bank, especially one that has no trade with the U.S. and is under sanctions, makes 100% sense to have reserves, not capital that you need to spend in trade, but just to support your finances, to have value in reserves, makes total sense to have it in gold. Gold and the dollar are the two best things, and in many respects, if it's just going to sit there, you're better off having it sit there in gold, in my opinion, than U.S. Treasuries, which are subject to counterparty risk, subject to whatever the United States wants to do, does do with their interest rates. Whatever they do, you're subject to that. But with gold, there's no issues. So if you can mine it in your backyard and you can work out whatever arrangement you work out with the miners and whatever structures you have to bring it into your central bank, then makes sense to do it. So the Philippines says they're going to add gold to their reserves. And then we got something here on Malaysia. There's a story on Malaysia. What are they saying about Malaysia? Now this is the same thing similar to what Russia was saying the other day, but they didn't really say it. They said they're considering it, but they're not sure they really want to do it because they prefer to trade in local currencies, but it's possible they could do a gold-backed cryptocurrency for trade. That's not the same thing as backing the ruble. That's just saying you can create a currency that could be used to facilitate trade amongst nations, especially nations that are not going to want to use the dollar or not allowed to use the SWIFT system. It makes sense, but the chief of the Russian central bank was saying we'd rather do currencies. This Malaysian guy, he proposed a common East agency currency pegged to gold. Now, that wouldn't mean the Malaysian currency pegged to gold. This is the concept of the gold trade note, but putting it on in a currency and having it gold backed. So, but they never give you the details where the gold would be stored and how it would operate. But it is something that if they want to figure it out, it's not that difficult to figure out. It's just whether the countries are going to trust the custody of the gold and how they're going to do it. And they're probably not there yet. You probably have to have a currency crisis to do it. The problem is when you have a currency crisis, it's too late because you can't really set up these structures because you're dealing with all the defaults and the liquidity and the fiat. So we'll keep an eye on that story there. Okay, I think that's it on the gold front. Yes, indeed it is. We've got some crypto stories. We've done the markets. Why don't we, before we do the crypto stories, handle some classic Moronica? We've got two pieces of Moronica here, so let's have at it. Uh-oh, we got a moron here.
Presenting the distinguished international news commentator and foreign correspondent,
Smaulgld. This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
Well, dizzy Miss Lizzie at it again, showing her economic ignorance off. She's in favor of actively managing the dollar's valuation to boost jobs. See, this is the type of ignorance that you see, that somehow you cannot just manage the dollar in order to boost jobs. You have to do what China does. You have to not only be a currency manipulator, you have to have a top-down, you have to run the entire economy, and that's difficult to do, and I'm sure she doesn't know how to do it, and that's not how free markets are supposed to work, but there she is, stepping into it, deciding she's going to actively manage the dollar's valuation as part of a plan. Says she's going to create American jobs. I don't know what she's talking about. Now, this is more moronic. I mean, that's typical economic hokum. But this is where the Democrats, Nadler, and those guys that are not, they're beating the dead horse. They're not giving up on this obstruction thing, this impeachment stuff. Anyone knows anything about Watergate? Watergate ended in Richard Nixon's resignation. Didn't even get impeached, but he was going to be. I remember the day before he resigned, they were saying he doesn't even have the votes. The Republicans aren't going to back him. But this was after 2 days of relentless hearings, and it turned out that Nixon covered up a minor crime, the burglary at the Watergate Hotel, and there was some other shenanigans going on. As it turns out, he had a White House counsel named John Dean. He later wrote a book, Blind Ambition, which apparently he didn't write. But he was the White House counsel, and he finally spilled the beans on Nixon, turned state evidence, and so on. All right, that's historically interesting. That's nice. And we know Woodward and Bernstein, through their contact Deep Throat, former assistant deputy director of the FBI, got a lot of information. They're still around today. They're all in their 80s, these guys. And the problem is that Watergate had an actual crime, had actual obstruction. I mean, it wasn't the crime of the century. And they also, Nixon had lost his popularity. Nixon did not have the same ability to combat the media the way that Trump does. He would say, let me say this about that. And he would ramble on about something. And then he would say, the country needs to know whether their president's a crook or not. No, I am not a crook. And he just didn't come off very well. And he lost the public support. Anyway, John Dean got convicted. He's a felon. He got convicted of obstructing justice. And so this makes him an expert, I guess, on obstructing justice. Congress, now this is moronic, has invited him to testify. Testify about what? Well, John Dean, he knows about obstruction. He was the White House counsel to Nixon, so we can make an analog that that's why we need to see McGahn, Trump's White House counsel, because he probably... This is a waste of time. I don't know what John Dean adds to this. John Dean is guilty of obstructing justice as a lawyer for Nixon, so we're going to have him testify. It's just plain moronic. All right, let's get into the crypto... You know what? Let's cut it short. We'll stack the crypto stories for Friday night. Maybe we'll cover some of them tomorrow. I want to get to your comments because some people like the long... This is going to be long anyway because your comments are going to take some time to go through. And I don't want to go through all the crypto stories. Other than to mention, we do need to put a footnote down that the price of Bitcoin has dropped well over $1,000. What is it right now? It's at 76.37. It had gone down to 74.50 or something like that, but it had been as high as 8,800. It drifted down to 84, so it dropped about 1,000 points. We're gonna go through all those crypto stories. Hope tomorrow, if not, we'll just do Friday night crypto with Smaulgld, and we'll bang them all out. Nothing. Again, if it's game changing or if it's something that is need to know, we'll cover it. But there's just a lot of stories that we have to go through. All right, let's see what you guys are saying in the comments. While you're waiting, I'm going to put up the Smaulgld fundraising page. By the way, sometimes people anonymously send me, looks like Litecoin is the one people like to send. I do appreciate that. And I do appreciate the letters and the checks and other items of value that I get from time to time. I want to thank people for that. And let us see what you're saying. What happened here? I know what happened. I haven't gotten any pictures lately of the Smaulgld mug stackers and their dogs and cats. I used to get a lot of those. They seem to have dried up. People are still buying the mugs, but they're not filming, taking pictures. All right, what do we have in the comments? Remember, if you want your comment called out, and I should have mentioned this at the beginning, some people were asking last night, do I take comments? Yes, I should announce at the beginning that we will take all comments at the end. Anyway, if you want your comment called out, type in SMAULGLD before you type your comment, and then I'll see it, and I can handle it that way. Okay, where's Barry? Pablo is here. Silver is super bueno. Roger Henley. Yes, does this mean Bitcoin is dying for the 147th time? Okay, where's Barry? Let's see. Philip Quinn, greetings, mug stackers and game-changing 1%ers. The 1% is here. Oh, the stream was cutting out. That's not good. It's the Russians, says Roger. That's right. Yeah, Roger says Powell sounds like Mario Draghi's promise to do whatever it takes. Yes, indeed. No can do, right, Pablo? Sounds like Hall & Oates. I can't go for that. Seth Shepard's here. What's up, game changers? Last night we had Salivate Metal joined us, though we didn't get a chance to interact with him. Gold silver ratio over 90-1, says Roger. That can't be possible. Bix Weir says it should be parity. Yeah, that's crazy. But you're right, Where's Barry? Sometimes, Bix does, you get him on a point, sometimes he does make a lot of sense. And then you hear this Road to Ruta and Road to Roomba and Gold in the Grand Canyon and 1-1. And then you're like, what are you talking about? But remember, he joined in the chorus with this guy when I was talking about the gold-silver ratio. Anybody remember what the gold-silver ratio was when I was on SGT Report? It's probably like 83, 84-1 when it was out of whack and unsustainable. Now it's 90-1. Shark Air is here. All right. Let's see. Tossing Molotovs. Hello. Ann is here talking about a crypto dump. Oh, here we go. Roger. Well, ignorant people like you never asked to see my Smaulgld counterfeit goods price list, so you wouldn't know if it was Australian dollars or US dollars. I think, Roger, you had mentioned you were going to make another video of one of your counterfeit Smaulgld mugs, and you never finished it. Right. All right, I think we're almost done. It might be time for Bernie. Give you the countdown. Roger says, I haven't made any videos for a while. I've been thinking about some new ones, but I have one planned soon. It will involve a cameo appearance from a Smaulgld mug. A Smaulgld mug or one of your fake mugs? I believe one of your fake mugs. Yes, one of your fake counterfeit Smaulgld, ungame-changing, game-stabilizing mugs. All right. Well, it looks like it is time to call in Bernie, and if we don't have any further questions or comments, we're going to call it a night, and we'll see you tomorrow. So, Bernie, you ready?
I'm ready. And the thing about Donald Trump, he's over there in England, and he's a disgrace to this...
Bernie, the countdown.
I just want to say that he's a disgrace to this country, because when he's over there calling the Duchess of Sussex that she's nasty, that's not the right thing. That's the talk of a bad man.
Bernie, can you just give us the countdown?
All right. So, ready? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Have a good night.
Thanks, Bernie. Have a good night, everyone.